Are we on the brink of the most significant banking crisis since 1929? A question that's been haunting financial enthusiasts as we inch closer to a potentially catastrophic banking crisis. With around 1,000 banks on the verge of failure within the next 10 months, the stability of the financial sector appears to hang in the balance. This precarious situation finds its roots in the rollercoaster events of last year, when major banks such as Silicon Valley Bank and Signature Bank crumbled, marking the third largest bank failure in US history. To combat this banking upheaval, the Federal Reserve rolled out the Bank Term Funding Program, or BTFP. This initiative threw a $161 billion lifeline to 1,844 banks, buying up their losses at full value to stave off immediate financial ruin. But this emergency measure has a sting in its tail, as these banks now owe the full value of assets that were deep underwater. The broader economic context adds another layer of complexity. The recent turbulence of the Japanese yen, a rapid depreciation followed by an unusual intervention from the Bank of Japan, underlines the interwoven nature of global finance and its ripple effects on the US banking sector. Add to this the looming threat of major US Treasury sales, which could see the investment landscape shift dramatically. With the US potentially needing to lure investors with higher yields, we could see a significant migration of money from bank deposits to government debts. The potential consequences of this situation paint a grim picture for the US economy and the banking sector. With banks saddled with BTFP loans and worsening economic conditions, the risk of more bank failures looms large. Historical data and recent trends suggest a significant number of banks could either collapse or consolidate, leading to a potential banking crisis with the power to reshape the financial landscape. For individuals, this situation underscores the need for financial vigilance and preparedness. Bolstering your credit standing and securing a strong financial position could be vital steps. Services that help improve credit scores or manage debt may become increasingly valuable as banks tighten their lending criteria in response to mounting financial pressures. As we steer through these uncertain times, the potential for broad economic change is palpable. The banking sector, already on shaky ground, is entering a critical period that could determine the financial stability of millions. Understanding these dynamics, preparing for potential upheavals, and engaging in informed discussions about our financial system's future are steps we must all consider. The unfolding scenario not only calls for strategic financial management, but also a wider reassessment of our economic and banking system's resilience in the face of global financial stresses. And, as always, remember to like and subscribe for more insightful content.